Wild credit worries on Wall Street, storms brewing in the Atlantic, and the Federal Reserve trying to save the day. Are investors just plain old spooked regardless? Good morning. I'm Neil Cavuto. Let's get the bottom line, shall we? From Ben Stein himself, along with Tracy Burns and Charles Payne, along with Stuart Varney and Peter Schiff. Ben Stein, you say this could be a perfect storm for buyers. What do you mean?
I mean that the credit crunch is way overblown. The financials are being given away. They're so unbelievably cheap. Many of the resource companies have gotten really whacked and are cheap at this point. The subprime problem is a problem, but it's a tiny problem in the context of this economy. The storm is a problem, but it's a tiny problem. Meanwhile, it's as if nuclear war has struck the financials and really struck the whole market. It's a buying opportunity, especially for the financials, maybe that I've never seen before in my entire life.
Tracy?
It is a buying opportunity, but I think the subprime is a bigger problem because we have a confidence issue going on in the market now. So whether it's a numerically small or large issue, it's affecting people's psyche about what to do in this market, and we don't want them to pull out. It is a buying opportunity. They could do really good things for their portfolio right now, assuming they have the stomach to get through this, because we're not done with this by any stretch. We don't know where this subprime thing is taking us.
And that's pretty much your argument, right? It's not all over yet.
No, this is just getting started. It's not just subprime. You know, this is a problem for the entire mortgage industry. It's not just people with bad credit that committed to mortgages they can't afford. It's not just people with bad credit who are going to see their home equity vanish. And it's not limited to mortgage credit. Americans are going to have a difficult time borrowing money to buy cars, to buy furniture, to buy appliances. You know, foreigners around the world have been lending us money for years. They're now finding out that we can't afford to repay. This is going to be an enormous credit crunch. The party is over for the United States. We cannot continue borrowing to live beyond our means and consuming foreign products. It's
you must
over.
Be a laugh riot at a party. Huh?
No, I'm pretty fun at parties. Okay. I don't just talk about this
Stuart, what do you make of that?
I think it is a short-term buying opportunity. You'll get a nice bounce in a few stocks, but long-term, I don't think you're going to see 14,000 on the Dow again anytime soon. The economy is slow.
Anytime soon?
Oh, in the next 3, 4, 5, 6, 7, 8, 9, 10 months. I don't think it's going to happen.
It's a wide range.
Yeah, I'm trying to give myself some room for maneuver here.
Okay.
No, long-term, this market is going to edge down because the economy is slowing. Tax hikes are coming, but you get a short-term bounce and a couple of nice stocks and make 5%. Nothing wrong with that.
All right, we are going to be looking at that issue of tax hikes that potentially could make this problematic going forward. But Charles Payne, what do you make of this issue that maybe the subprime thing, has been pointed out, got overblown?
Well, in of itself, it certainly is overblown, but subprime is not the problem. It never has been a problem. It's a symptom of the problem. But what we really have is on Wall Street, a lot of greed and arrogance. A lot of these folks, these hedge funds, just lost their discipline. But to Peter's point, you know, I got to tell you, Peter's rant is always anti-American under the guise of financial advice. It's not true. Let me tell you, first and foremost, America is still the straw that stirs the drink for the entire world. When America's stock market was down this week, the rest of the world's markets tumbled a lot more. So I'd be much more worried about an overextended euro that's way inflated than I would be about American subprime.
See, Peter, a guy with a yellow shirt just called you a fraidy cat.
No, it's not being anti-American. I'm just recognizing the problems of our economy. And we are not the engine of the world economy. We're the caboose. Sure, foreign markets went down along with ours, but it's because of the money they're losing on the money they lent us. It's because of problems with U.S. dollar-denominated asset-backed debt that they own. It's because of us. Ultimately, they're going to shrug this off. The global economies are going to go up. The global stock markets are going to thrive.
But one at a time. Charles, go ahead.
They don't sell products to us.
Products to? You know, Charles, well, guess what? Listen. Well, all I'm telling you right now is that the fact of the matter is you cannot take the U.S. out of the equation and think the rest of the world is going to keep going without a beat.
Charles,
no,
remember,
this week was proof of it.
No,
the world almost went off a cliff because we have a problem with the smallest part of our economy, the subprime part.
Give me a second, Charles. We're not buying products from the world. They're giving them to us. They're subsidizing our consumption. When they let our currency collapse, foreigners are going to see the biggest boom.
Well, let me, Ben Stein, let me get you back in this. I know you're concerned about the dollar as a longer-term worry, but do you think we are using this whole subprime issue as an excuse that there are bigger problems afoot here and that real market pros know it's an excuse?
I think the real market pros are shorting the hell out of this market, and I think this has been a speculator's wild holiday. Peter is right. There are long-term problems with the dollar, but we haven't defaulted on anything more than the most minute part of our obligations to foreigners. The dollar is still a perfectly trustworthy currency. The dollar is the reserve currency for the whole world. So what Peter's saying there, I think, is a bit off the mark.
Well, look, the dollar's down.
But subprime is tiny. Subprime is a tiny blip.
It's not tiny, and again, it's not just subprime. It's the entire mortgage market, right?
All right, well, Tracy, you're disagreeing with.
Simply wrong. Well, you're simply wrong about that.
No, I'm not.
You're simply wrong.
To Ben's point,
well, defaults for the whole mortgage market are tiny.
No, but it's good. Just give it time. Wait till all these mortgages reset. Wait till people realize.
So you're saying it's going to be bad.
The problem is it's the traders.
The longer up the road.
The problem is we hear from these traders on a day-to-day basis. The other business channels go down on the floor, they hold the mic up to the trader, and they say, "How was your day?" And the trader says, "Horrible." It's not horrible,
Why are you
though.
looking at other business channels?
I'm doing research. Research for the future, Neil.
It's not a nice thing to be saying here, young lady.
But I'm
right,
saying
Stuart,
that it's not right. No,
I have lived in America for 32 years. In each of those 32 years, there's been a trade deficit, and we've all been waiting for that run on the dollar.
Have you been here legally?
Yes, I've got a green card.
You're not going to have to wait much longer.
We have not yet had a dollar crash, and I don't think we're going to see a dollar crash anytime soon.
Absolutely.
You're exaggerating.
No, we're going to see one. You remember, who's the one that predicted on this show that we're going to have these problems in the mortgage market?
Well, a broken clock is right twice a day.
I've been right a lot more than twice.
Okay. Charles, let me ask you this. Is the message going forward to the markets, be cautious every time we have a run-up after a big run-down because it's a suckers-type rally? What do you think?
Not really. Listen, it bounces around a lot, but we saw this last year. We had not obviously to the extremes that we're seeing it this year. We saw it the year before and the year before and the year before. The reality is that the fundamentals are absolutely great. And as far as a weak currency is concerned, everyone would like a weak currency. China wants a weak currency. Japan wants a weak currency. And the fact that Europe doesn't have one.